So no, I don't think that there's two armed camps. The world is not becoming bipolar. And I think that pretty much 90% of people I speak with don't understand that the world we're in right now is not a transition to something else. It's here to stay. Yes, it's very complicated, it's volatile, but no, this is not the first time the world has been like this. It's just the first time that you have experienced it in your lifetime. And that's the fundamental problem I think most of us have. None of us have lived in a multipolar world. All we know is American hegemony, if you were born in the 1990s and after, or maybe you remember the Cold War and a bipolar ordering. So everyone's over indexing to what they've experienced in their lifetime. But the reality is that throughout human history, it's actually this exact type of a geopolitical environment that's dominated. So conflicts breaking out all the time, and yet life somehow still going on as is.
Hey everyone, and welcome to another episode of the What the Finance podcast. On this episode, I have the pleasure of welcoming back Marko Papic. So Marko is chief strategist at BCA Research. He's also very well known in geopolitical sort of sphere and wrote a book as well, Geopolitical Alpha, an investment framework for predicting the future. So Marko, thanks so much for coming back on the podcast.
Oh, it's a real pleasure. Thank you.
No, probably looking forward to the conversation, and I think it's been, probably a year, over a year since we last spoke, and it seems like it's been decades with everything that's been happening in the world and the volatility we've seen in geopolitics overall. But I'd be really interested to hear, what is your framework to sort of understanding this? Because I think everyone's really been struggling with everything that's been happening and the volatility and how it's been impacting them. So how do you look at this?
Well, first of all, from a very broad perspective, I would say that investors should fade geopolitics on the tactical time frame and incorporate it on a strategic. What does that mean? When I say fade, I mean that if an event occurs and asset prices move up or down because of that event, the way you will make money, if you want to make it on a tactical time horizon, if you want to trade, is by betting against that move. 9 out of 10 times, geopolitics has no sustainable effect on anything in the short term. Yeah, this is quantitatively proven, but you don't have to believe me and my math. You can just believe in my experience, because I've been doing this since 2011, incorporating geopolitics and politics for the most sophisticated investors out there. That's been my job, trying to make it market relevant. And in doing so, what I've realized is that it's not market relevant. Now, most geopolitical strategists don't really have the temerity to say what I just said, because they think their job depends on them making geopolitics relevant. Like, hey, you really need to pay attention to this. My job is not to be a geopolitical analyst, it's to be an investment strategist, to advise investors through my research. And so my job is to just get the markets right. And in the short term, on a tactical time horizon, geopolitics almost never matters. The most obvious example is the Israel-Iran war. The oil prices increased due to the geopolitical risk premium for about the same length of a fruit fly life cycle. Actually, it's shorter. Fruit flies last 40 days. That thing lasted like 8 days, even less if you think in terms of trading days. So that's a good example of how the half-life of relevance of geopolitics is pretty short. However, if you're trying to make investment calls over a 5-year horizon or a 10-year horizon, I don't know what else you would use. And while that seems pretty obvious to most people probably listening to your podcast, this is not how professional investors operate. When it comes to long-term asset allocation, strategic asset allocation, most investors actually rely on sort of completely, nonsense mathematics, trying to predict inflation and growth based on some voodoo, and then incorporating that into asset allocation. And I think that's wrong, because inflation and growth are fundamentally about politics and geopolitics anyways. So if you're going to predict where markets are going over the next 5 to 10 years, you absolutely need geopolitics. And most listeners to your podcast, to what we're doing right now, they're going to really be thinking about their own personal portfolios. And unless you're a day trader, which I would not recommend anyone to be, But unless you're a day trader, most of us should be investing over a longer term premium. And so yes, geopolitics absolutely matters to us, but in a way where it decides who are the winners and losers over the next 10 years, not in the way in which you should obsess about every headline, at least when it comes to the markets. And of course, I speak from a perspective of the markets. I don't look at geopolitics and politics in terms of how it impacts, human suffering, or who should win or who should lose, who's right, who's wrong. That's not what I do for a living. I purely focus on asset prices, markets, the economy, and finance.
Yeah, really interesting. Thanks for laying that out. And I think I've seen, it's a pretty funny meme where it's saying if, if these wars escalate into World War III, then nuclear war, we're all dead, so it doesn't really matter. And if it doesn't, then the market will go back up. So you may as well just keep owning assets or buy the dip. That sort of is what we're saying. It seems like it to be
in the short term. Yes,
yeah.
In the short term, absolutely.
Yep. And then when you say tactical, is that sort of 3-6 months, or it just depends on sort of the from the investment time frame?
Well, I would just say that trading geopolitics is something that I think most people do incorrectly, in that when something happens, they will triple down on the worst possible outcome. So when I say tactical, I mean post-event, T equals 0. Time equals 0. It's day 1, day 0. Event happened. There's a lot of pessimism. Why? Because first of all, most really impactful geopolitical events like wars, like Russian invasion of Ukraine as an example, the probability of them as judged by the market is low. And then they happen. At that point, the sort of untrained eye says, well, the market got this wrong. It happened. Therefore, this is going to get really bad. However, that's not how the world works. Just because Vladimir Putin wanted to invade Ukraine and say the market didn't expect that to happen, it doesn't mean that the challenges and the difficulties and the material constraints to invading Ukraine are not still there. He just ignored them. And so oftentimes what happens when a geopolitical event happens is that investors, especially those who want to trade that event, they extrapolate the low probability event itself into its logical conclusion, which is World War III, effectively. They start thinking like, wow, the realm of what's possible is infinite. I need to be bearish, or I need to expect risk premium to be embedded into assets. My view is that, no, not really. Like, the world doesn't have infinite possibilities. It has probabilities. And those probabilities are not really affected by the fact that the event happened. In other words, the fact that Vladimir Putin decided to attack Ukraine doesn't change that his military is not very good, that Ukraine is a huge country, that it's supplied by Western weapons, blah, 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 that it's going to be difficult. And so when oil prices and commodities, for example, started to appreciate both in February 2022, after the Russian invasion of Ukraine, and of course in June of 2025, when Israel attacked Iran, there was this assumption that premium has to be there because there's a slew of scenarios that can lead to significant supply loss without really thinking through the constraints. And so that's what I mean when I say tactical. Now, in the case of Russia, Ukraine, the time to short oil was 3 months later. So it was really June of 2022. February was the invasion. Oil topped, I believe, in June of 2022. Commodities, by the way, wheat and other metals did so in May, but oil prices had this one run up in June. So there was an opportunity to short really 3 months later, 3-4 months later. In the case of Israel and Iran, you basically had hours, if not days, to make that decision and to push against the risk premium. So that's what I mean tactically. It depends on the situation, but it's always the short term.
And yeah, as you're saying, it's very hard to trade these sort of short-term tactical mechanisms because it's, the probabilities are there, but obviously, as we're seeing, sometimes the rational decisions aren't being made, and there's sometimes, what everyone thinks is going to happen it doesn't happen.
Yes, and I would say that it's not that rational decisions aren't being made. It's just that the policymaker, a politician, decides to do X without fully understanding the material constraints that are arrayed by, in front of them. So that's one of the reasons. The second is that something that most investors, especially most sort of armchair geopolitical analysts, are very bad at doing, is understanding that first order effects do not matter. Chasing a first order effect is folly, and that's how you will lose all your money. The second order effect is what really matters. So COVID is a great example. COVID effectively became market relevant at the end of February of 2020. By March 23rd of 2020, markets were down big time. And that was it. That was the bottom. You had very sophisticated investors basically poring over data and models, predicting how many people are going to die. The market didn't care. The market bottomed on March 23rd, 2020. We were like 2 weeks into the lockdowns. So why? Well, because first order effect of a pandemic is that people die from a virus. The second order effect of the pandemic is that we have to lock down the economy so that people don't die of the virus. Those are both bearish. But the third order effect of the pandemic was an absolute orgy of fiscal and monetary stimulus, which ensured that in Q2 of 2020, US GDP growth declined on a quarter-on-quarter basis by 28%. US GDP declined quarter-on-quarter in Q2 2020 by 28%. That's like asteroid hitting the Earth. And S&P 500 went up in Q2 of 2020, 20% in one quarter. That's unbelievable, but you should always keep this in mind. The first and second order effects of the pandemic were bearish, but the policymaker reaction was not bullish. It was hysterically optimistic. And so that is something that we need to understand. You can't just be trying to trade a geopolitical event. You also have to trade how the rest of the world reacts to that event. Again, going back to Russia, Ukraine, very interestingly, everybody was concerned about supply of crude, thinking that somehow Western leaders were going to shoot themselves in the foot by increasing inflation in 2022, when inflation was already double digits, by embargoing Russian export of oil. And the reason I shorted oil at the time was because it was very clear when you actually read the documents about the oil embargo that there would be no secondary sanctions. In other words, the United States of America and Europe effectively winked at the rest of the world, including India and China, and said, look, we're not going to sanction your companies that trade in Russian crude. You guys go right ahead. Oil is a fungible resource. We're going to stop importing Russian crude. You can take that. We'll take the Saudi crude instead. Obviously, oil is not fully fungible. There's different grades of refinery and so on and so on and so on. But the point is that we didn't suddenly just lose 5 million barrels of Russian crude exports. They just went somewhere else. And that was by design. That was by design. Policymakers decided to do that so that it wouldn't have a huge effect on the economy. And that's, I think, very important. Oftentimes, these momentous events that are difficult to predict, it's not about trying to predict them. That's not what trading geopolitics is about. It's that once T equals 0, once you're in that 0 day, it started, event X has started, markets dislocate, and then you got to trade second and third order effects, not the first order effect.
And do you think that's why people struggle so much with Trump and I guess Putin and these other leaders who say these things, but then maybe, as you're saying, they're looking at the second and third order? Is that sort of interrelated as well?
Well, I don't know if Trump and Putin are the same. Putin, he didn't really say he was going to invade Ukraine, to be fair. I mean, he just kind of changed his mind 2 days before and then invaded it. And there's like a really well-documented shift in Russian thinking. He did put 150,000 troops outside of Ukraine in February 2022, but many people forget that he did the exact same thing in April of 2021. In April of 2021, he put hundreds of thousands of troops on Ukraine border during military exercises, and they decided to pull them. He decided not to engage. And actually, Russian policymakers and various spokespeople were clearly making fun of the West in a way that would not suggest they were about to invade. And then something happened with 3 days to go. So My view is that, Putin kind of just decided last minute to do this. He didn't in April of 21. He did in February of 22. Why it's difficult to say. Some say it was because he was emboldened by U.S. withdrawal from Afghanistan. Maybe, maybe not. I don't want to speculate. With President Trump, there's something else going on. President Trump uses very aggressive rhetoric because that's how he negotiates. By using aggressive rhetoric, he hopes to effectively push his rivals or negotiating counterparts to expect the worst. I'm going to put 50 or 100% tariff on you unless you make a deal. But then he's actually quite willing to make a deal and change what he's doing. So with Iran, as an example, early on the bombs get dropped. Maybe we are doing regime change, but then later, like, no, we're not. So you want to alarm and off balance your opponent, and then eventually you make a deal. But yes, I think that the markets are becoming more adept at understanding that ultimately what policymakers say is not what you should be trading. Like, why would you trade something that a policymaker says? They could be saying something that they're doing to manipulate the markets and expectations. They could just be uninformed about the material constraints that they face, but they're about to find out as they perform the action that they said they were going to do. So just what they say doesn't really matter. And, I compare this to investors, not taking quarterly earnings calls that seriously. Like, just because the CEO says that next year their growth is going to be X, as an equity analyst, as a bottom-up stock picker, you're not going to sit there and be like, well, I'm long this stock because the CEO said they're going to crush it. Similarly, you shouldn't be trading geopolitics just because a policymaker, says something.
Yeah, it is a really good point. As you said, they're trying to sell something, they're trying to negotiate something. Don't take it basically at face value. And before we go into, there's obviously lots to talk about Trump, but I'd be really interested in hearing your sort of framework or how you've seen geopolitics advance over the past decade or so. Have you seen this major shift, and maybe what have you seen driving it?
Well, I've been very consistent about this for the last decade. For the last 14 years, I've had the exact same view, which is that political science tells us that when the world is multipolar, it looks like a cacophony of risks. It looks like a very volatile geopolitical world where conflicts are breaking out left, right, and center. So what does this mean? Where the world can really be three different scenarios. It can be a unipolar world where one country is in charge. For much of the world, this is an unhappy place. It's unfair. Someone's the emperor. Everyone else is the vassal. Someone's the hegemon. Someone's the superpower. But it does create order, and it tends to lower geopolitical volatility. Wars still happen, but they almost exclusively happen on the terms of the country that's in charge. So the United States of America will choose, for example, to intervene when Saddam Hussein invades Kuwait, Desert Storm 1, or when Slobodan Milosevic is imposing, military operations in Kosovo, as NATO did in 1999. So there's still wars, but they're mostly being conducted by the hegemon. So the system is very stable. The second ordering, which many Americans think we're in or progressing into, is a bipolar world order. Cold War. There's kind of two bullies. They create very neat camps. And there's still conflict between the two camps, but it tends to happen only when the two superpowers sort of pick different sides. And there's a limitation to how far the conflicts can go, because most countries don't have an independent foreign policy. They have to first check in with one of the two superpowers if they want to do something. So a good example of how bipolarity reduces tensions is Israel, France, and the United Kingdom decided in 1957-58 during the Suez Crisis to basically invade Egypt. And the United States had a deal with the Soviet Union regarding Egypt's geopolitical orientation. And so they were forced to effectively back out of that operation by the US. And sorry, that was 56-57, not 57-58. So the Suez Crisis is a good example where three countries, relatively major powers, I mean, United Kingdom and France, of course, former colonial empires, nuclear powers, they decided to join with Israel and attack Egypt. US called up and said, you guys need to get out of there because actually we are aligned with the Soviets on Egypt. And then, of course, you have a multipolar world. Multipolar world, because there's not one or two countries running the world, there is too many veto players from a game theoretical perspective. There's too many countries acting independent of one another. So the probability of conflict is quite elevated. And what's interesting to me is that both investors and just commentators somehow believe that we're in a transitionary period, that we're going somewhere, either to World War III, and therefore you should live in the woods, or towards American hegemony that reasserts itself, or Chinese hegemony, in which case you should be teaching your kids Mandarin, or towards a Cold War. And I would say that most people, especially in America, are either in the Cold War 2.0 world. They expect there to be a pretty neat division between the China sphere and the American sphere, or they believe that America is either still in charge or will reassert itself in charge. So those are kind of the two dominant camps. My view is that we're not going anywhere. We're going to stay right where we are. The world that you have observed over the last 10 years is the world we'll be in for maybe 50 or 60 years. And this is because political science theory and history, like actually reading history, tell us that throughout human history, throughout the story that is the sort of human experience, the world has actually been in a multipolar distribution of power far more than in a unipolar or a bipolar world. So take the last 250 years. In the last 250 years, we have been in a multipolar world about 150 to 170 years out of those 250. So the vast majority of this time period was spent in this very volatile, confusing, complicated situation. But at the same time, it's not that dangerous. Why? Well, because if two countries go to war and they're not backed by superpowers, there's a limit to how important that war will be. So if you think about 1812 to 1914, this is a period of European history we call the Long Peace. It's called the Long Peace because there were no world wars between the end of the Napoleonic warfare and the beginning of World War I. But that's actually a misnomer. It's a poor way to describe that period, that 100 years of the concert of Europe, as it was called. It wasn't really peaceful. There were wars all over the place. The Crimean War, the original Crimean War, the Franco-Prussian War, the Austro-Prussian War, the War of Schleswig-Holstein. I mean, I can just go on and cite many wars that happened on the European continent. However, they were all kind of limited in how far they went because they didn't immediately graft themselves onto some sort of a superpower rivalry. So like Austria and Prussia could have a small engagement, a small military engagement, make peace, and then later on move on, become allies even by the end of that period. So that is something that I think a lot of investors and commentators don't understand. Just because the probability and frequency of conflict has increased, it doesn't mean the world's ending or that we're nearer World War III. In fact, in many ways, a multipolar distribution of power lends itself less to a very clear Cold War or World War scenario. Now, of course, the counter to that is that the time period I just cited as evidence that multipolarity is kind of okay did end in a world war. And so that's where what's important to watch for is whether the world is neatly delineating into armed camps that look at each other in a very bipolar world. From 1890 to 1914 in Europe, that's exactly what started happening, where Austro-Hungary, German Empire, and Italy, to some extent, started creating a coalition, Ottoman Empire as well. And on the other side were Russia, France, and the United Kingdom. Definitely sort of two armed camps in opposition to one another. If you start noticing that happen this time around, then yeah, you should be worried. But my assertion to most of my clients and anyone who's going to pay attention is that we in America have created an opposition alliance that doesn't exist. China and Russia are not aligned. I mean, what kind of an alliance is it where China does not supply Russia with weapons? That's like a minimum requirement. If you're going to be allied with someone, then you support them if they're in war. China hasn't done that. There's absolutely no evidence that the US government has successfully brought to the table that says, yeah, China's supporting Russia. You know, they point out like, well, Russian drones have Chinese electronics in them. Yeah, Ukrainian drones have Chinese electronics in them. My toaster oven has Chinese electronics in them. So that's not enough. And yes, China does buy a lot of Russian oil, but so does India, which is nominally aligned with the US against China. So it's a very complicated situation. And then finally, how many times have you heard that there's this axis between Russia, Iran, and China, right? Well, why don't you go to Tehran and ask Iranians how they feel about the Russian and Chinese allies they supposedly have? Because they didn't so much lift a finger to help them during the confrontation with Israel and the US. So no, I don't think that there's two armed camps. The world is not becoming bipolar. And I think that pretty much 90% of people I speak with don't understand that the world we're in right now is not a transition to something else. It's here to stay. Yes, it's very complicated. It's volatile. But no, this is not the first time the world has been like this. It's just the first time that you have experienced it in your lifetime. And that's the fundamental problem I think most of us have. None of us have lived in a multipolar world. All we know is American hegemony, if you were born in the 1990s and after, or maybe you remember the Cold War and a bipolar ordering. So everyone's over-indexing to what they've experienced in their lifetime. But the reality is that throughout human history, it's actually this exact type of a geopolitical environment that's dominated. So conflicts breaking out all the time, and yet life somehow still going on as is.
I'd be interested in focusing on, if we think about the three areas where it could escalate, it seems like NATO and sort of Russia. That's obviously very much debatable. The Middle East and then China and Taiwan. So do you see any of these potentially? It seems like those are more likely to happen in this world that you're talking about. That there's more likely to be an escalation in those sort of spheres. Do you agree with that?
Yeah, I think for sure. I think that Russia and Europe are in the process of determining where their spheres of influence begin and end. I mean, that's a fundamental, that's a fundamental problem in a multipolar world, that you have multiple actors that pursue their foreign policy independent of one another. So in other words, what I'm saying is that during the Cold War, the Soviet Union and the United States of America basically knew exactly where the spheres of influence were. They delineated those spheres of influence by the middle of 1960s. From 1945 to the end of the Cuban Missile Crisis, the United States and Soviet Union knew exactly where their spheres of influence ended and began. This didn't mean they didn't have conflict. I mean, Vietnam War was in a way, a conflict over a country, Vietnam, that suddenly decided to have potentially implications for which sphere this country joined. And so there was a war about that. But it was a limited war that had to just do with Vietnam. For the most part, a bipolar structure is very, it's very stable once the two hegemons that make up those two spheres have decided where their spheres of influence end and begin. The problem with the multipolar world is that there's multiple countries pursuing their foreign policy independent, which, on some ways is normatively and morally superior. There's more agency, there's more independence, there's less vassalhood. The problem is that means that countries as tiny as Azerbaijan and Armenia now have a dynamic where they can become what political scientists would call a conflict dyad. It's a pairing. It's the duality of war. So even two countries like Armenia and Azerbaijan can suddenly decide in 2020 that they need to have a little bit of a war to decide where their sphere of influence is. So the parts of the world that you've identified are those where those spheres of influence are being decided over big patches of land. So not Nagorno-Karabakh, as is the case in Armenia and Azerbaijan, but in other words, like where does the border between Russian sphere of influence and Western Europe's sphere of influence end and begin? I think we've pretty much found that border. We found it, and it's a function of Russian military capabilities and their willingness to tolerate severe domestic pain due to a conflict in Ukraine. Clearly, the Russians were quite willing to tolerate some pain, but it's increasingly becoming clear that Russians believe that they've won the war in Ukraine, but at the same time, they don't want to pursue any further. So that's what the polling out of Russia says. And I know people are going to laugh at like, wait, you have polling in Russia? Yes, we do. We have pro-Kremlin polling agencies that have publicly available data. So the fact that, pro-Kremlin polling agencies are telling us that domestically the people want peace, I think that's significant because you wouldn't expect them to be getting that result and publicizing it. So I do think that Russia is trying to find a way to extricate itself out of the conflict. However, there is a problem. Vladimir Putin has promised that he will annex Crimea and Donbas in their entirety. And Donbas is made up of Luhansk and Donetsk. And somehow magically, and quite fascinatingly, Russia has been unable to conquer all of Donetsk in 11 years of war, not just 3. This goes back to 2014. That's really shocking, to be quite frank. And anybody who thinks Russia is about to invade Estonia or Poland has to explain to me how they have failed to conquer all of Donetsk, an oblast of Ukraine that has Russian speakers, ethnic Russians, is fairly pro-Russian. How have they not been able to conquer this oblast? So on one hand, it shows the limits of Russian capability and appetite. On the other hand, until that third remains unconquered, I think it's going to be very challenging for Vladimir Putin to go back home and say, okay, we've now won, we can stop. So you could almost say it in this way. President Trump was elected too quickly, Putin would have preferred if President Trump became a president in 2026, when hopefully, from Putin's perspective, he had completed this conquest of this region of Ukraine. So no, I'm not too worried about this. Russia has failed miserably in Ukraine, quite frankly. Their goals were complete conquest of everything east of the river Dnieper, at least. They've fallen far short of that. And yes, I know they're building a lot of tanks. A lot of kind of bears are telling you, well, if they're building all these tanks, don't they want to destroy all of Europe? Russia's lost over 2,000 main battle tanks in Ukraine, which is an extraordinary number. Like France has 400 tanks. A nuclear power France has 400, and Russia somehow managed to lose 5 times more tanks in Ukraine. So no, the Russians are not building up their military to conquer anyone else. They're building it to replace what they've lost in Ukraine. This has been a disastrous military operation by any account. That's number one. The second region that you were pointing out was Middle East. I think actually Middle East is at the beginning of a period of enlightenment. I actually think that Middle East is perhaps in the best situation it's ever been. Now, we have to make a caveat here because a lot of people have died in Gaza. Some would say over 60,000. And that's a tragedy. And of course, what Israel does to Palestinian territories, Lebanon, and Syria, that's a question for those commentators of geopolitics who talk about morals and norms and so on. I'm not that person, right? So I don't focus on those issues. I focus on the economy, investments, and so on. And from a perspective of investments and the economy, the conflict between Israel and various enemies it faces, from a terrorist group like Hamas to a sovereign state like Iran, those have been completely irrelevant for the rest of the world, like completely irrelevant. We haven't lost a single barrel of oil that transits through the Strait of Hormuz since the Hamas terrorist attack on October 7th. Not a single barrel of crude has been lost. Why? And the reason is that Saudi Arabia and various other Gulf monarchies like UAE or Qatar or Bahrain or Kuwait, they have effectively decided to completely and utterly focus their efforts on economic modernization and on socioeconomic reforms. What's going on in Saudi Arabia, I would say, hasn't happened since the Meiji Restoration in Japan. Where a country basically just decides, like, look, what we've been doing for the last 50 or 100, 150, 300 years doesn't work. We need to do something completely different. When a country throws away or sidelines its culture, its religion, its norms, its traditions, for the sake of achieving economic modernization. And that's what Saudi Arabia has done. And I don't think it gets enough credit for that. But in pursuing that, Saudi Arabia has also concluded a détente with Iran in 2022, which was completely ignored by Western media because it wasn't concluded by Americans. It was a sui generis. It was something that Saudis and Iranians basically concluded themselves. And that is why Iran has not once retaliated against any of the crude produced in Saudi Arabia and the Gulf. Instead, Iran and its proxies, such as the Houthis in Yemen or Hezbollah in Lebanon, have focused on retaliating against Israel. The shipping in the Red Sea is a good example where the Houthis selected to attack shipping that doesn't matter for the global economy. It really doesn't, because the Red Sea there's alternative routes to it. But they haven't focused on the Strait of Hormuz, which they could have. I mean, their drones do have joysticks that go both north and south. So the fact that the Houthis are targeting a piece of, sort of maritime infrastructure that doesn't really matter is very relevant. It shows that this détente between Saudi Arabia and Iran is holding. And I think that it's a foundation of equilibrium in the region, as is the decision by the US to not get deeply involved or pursue normative or moralistic policies, but instead destroy the nuclear program in Iran and say, like, look, that's all we want to do. Let's get back to the negotiating table. So I'm actually positive about the Middle East as well. In Asia, the issue is one where China and the US are trying to figure out where their sphere of influence begins and ends. And I think that this is where the biggest risk is over the next 10 years. I think that the issue over Taiwan, but even just broadly, Chinese sovereignty in the South China Sea, how it reintegrates its wayward province of Taiwan, those are all questions that are going to have to be decided. And it's a very complicated situation, because if the United States of America decides to retrench even a little bit from the region or introduce any ambiguity to its support for a one China policy, but where Taiwan is effectively self-governed, if the US introduces any ambiguity into its support of Taiwan, it could incentivize and attract Chinese assertiveness and aggression. And so I would say that that's the one part of this whole puzzle that does worry me, and where I think the probability of a significant calamity is much, much greater than it is in Israel or, in Middle East or in Europe. However, no country would suffer more if the world became bipolar than China. And that is perhaps counterintuitive. Most Americans in particular, but especially Westerners, but especially Americans, most of them believe that China wants to rival the United States and create a separate zone. The problem is that this is far from evident. China has no allies. There's no Australia that China has. There's no country that clearly will commit itself to a partnership on security and economic affairs, as Australia has with the United States, or similarly, NATO countries. China has Russia, which it doesn't really support in the Ukraine conflict. And it's not clear how Russia would help China. It certainly wouldn't help it economically, other than through sale of commodities. And what, Iran? Not really. North Korea? North Korea is a headache to China. It's not an ally. So if the world were to separate along the China-US axis, my highest conviction view on the planet, this is as high as I can get, is that we would be in a bipolar world for like 5 years. And then it would go back to American hegemony, because the United States of America would absolutely crush China in a peer-to-peer competition. Not because US is far more superior than China, although I think it's measurably more powerful, but because the US could rely on a great variety, a cornucopia of allies, from South Korea to Japan in the region, to Australia, to India, which would certainly not want to ally with China, because it's so proximate to it, and then finally Europe. It would be just an overwhelming alliance. And so while I worry the most about East Asia, I also see China understanding that a bipolar world is not in their favor, at least not now, not at this point, not in 2025, maybe in 2035 or 2040, when China is far more powerful. If they get to that point, they might feel comfortable challenging the US outwardly. But I don't see them doing that in the short term. Of course, I could be wrong, in which case their foray into adventurism will be very brief because they will see the world unite against them. And that would not help China in any way, shape, or form.
Yeah, thanks so much for laying out the in-depth analysis of all those regions. And how do you see this impacting markets strategically, I guess, in this strategic period? I know you talked about sort of the US potentially not being as exceptional as it has been in the past. Is that what you're saying?
Yeah, so basically what I've described right now is a multipolar global order. And my argument is that we're not going to transition to anything. We're going to be stuck in it for a while. It's not the end of the world. It doesn't mean the world is falling apart. It just means we're going back to a very regular, expected, and quite frequent distribution of power. So what does that mean from a strategic asset allocation? Well, you should think of geopolitics like hardware. It's like a computer, like a desktop. You've got your keyboard, you've got your monitor, you've got your mouse. That's your hardware. That's geopolitics. And we bought a new system. We threw out the old American hegemony unipolar hardware, and we've got now a new fancy multipolar system. But we never upgraded our software. So our software, our user interface, is still that of a unipolar world. And so what does that mean? Well, when you think about trade and capital flows, that's your software that sits on top of geopolitics. And currently, trade and capital flows still reflect a vestigial unipolar context. So US basically has a deep current account deficit. It's the consumer of last resort, and it buys up a bunch of goods that the rest of the world makes. Now, that sounds pretty bad deal for America. And many theorists aligned with President Trump really emphasize this point. Like there's a huge trade imbalance and fiscal imbalance, and that's not fair to the United States. So it needs to be changed. However, that's only half of the story, because the flip side of a current account deficit, of course, is the capital account surplus. In other words, yes, the rest of the world makes stuff and America can buy them. Oh no, boo-hoo, poor Americans. But the reality is that when the rest of the world sells its wares to the US, it gets US dollars, and then it takes those dollars and reinvests them in America. So this is, in net terms, very neutral, if not positive, for the United States. The rest of the world is effectively using America, yes, as both the consumer of last resort, but also as a sovereign wealth fund. And so my argument is that that's just unsustainable. It was very sustainable in a unipolar world where the United States was magnanimous, where the United States would look at Costa Rica or China or Colombia and say, yeah, you're all the same. We'll buy your stuff. Now the US doesn't look at the world like that anymore. It's more Machiavellian, less magnanimous. And so the US cannot allow access to its final demand, to its domestic economy, to be unfettered. It has to basically set various rules and norms of how you access the US consumer. Also, I would argue the US has boosted its economy too much with fiscal policy, in part because the rest of the world allowed it to do that and kept reinvesting the proceeds of current account surplus in trading countries, in countries that benefited from US demand, back into the US, allowing it to finance its debt at the lower level. Now that America is more Machiavellian and the rest of the world is more Machiavellian, these imbalances no longer work. For in a multipolar era, they're going to have to adjust themselves. The US current account deficit, which will still be in a deficit, by the way, it'll just narrow. It'll half, which means the current account surpluses of other countries will have to half as well. It's not a tragedy. It's not the end of the world. It's just going to have to happen. But as it happens, there needs to be portfolio outflows out of the US, because again, capital account surplus is the flip side of a current account deficit, not perfectly, but to an extent. And what that means is that as American current account deficit narrows, which is kind of a positive, it will experience some outflows. Is that bad for the economy? No, but it does mean that American assets will underperform the rest of the world. And in a way, that's a good thing for the US because a cheaper dollar will make it easier to adjust the current account deficit. It will make that seamless and less painful. And it will also set the US up for a very interesting 2030s when finally it's again competitive. And maybe it attracts some investment instead of just portfolio flows that can come in and out. Right now, the US finances its current account deficit mostly through portfolio inflows, not FDI. And so that is something that could change as the currency becomes cheaper, as US becomes more attractive to invest. It will attract more sustainable long-term investments. At the same time, it will boost its own exports because of the currency adjustment. So this is a much more elegant solution than tariffs. Although I do think that the Trump administration is using tariffs to effectively front-run this move in the currency. So what does that mean for investors? Long story short, whatever allocation you have to the US, cut it in half. For the next 5 years, that's the way it's going to work. And again, not because America is no longer going to produce great companies or innovation. It's just that this adjustment mechanism will require the US to get cheaper and for more capital to be more diversified. If geopolitics is multipolar, asset allocation has been very unipolar. Whether you're a family office, whether you're an individual with some savings, whether you're a sovereign wealth fund or a pension fund, you're up to your neck in US assets. But that does not reflect the geopolitical distribution of power. And so that allocation will have to come down, but it will set up US for, I think, fairly positive market returns in the 2030s. From now until then, the US is likely to underperform. I'm not saying the S&P 500 is going to be in a bear market. It just means that in a year when the S&P 500 returns 4%, Euro stocks are probably going to return somewhere like 15, 16%. So that's what investors should get ready for.
Yeah, great. Thanks so much for laying that out. So, Marko, thanks again for your time today. Really appreciate it. If my last question is, what is one message you want people to take away from our conversation?
I think what people should probably take away from the conversation is that the world that we've experienced for the last 5 years, where there's a lot of geopolitical volatility, that's just the world we're going to live in. And we could live in it for 100 years. And so investors just got to get ready for that. And if you want to get ready for that, stop obsessing about the end of the world and read some literature on the 19th century, because that's the last time the world was multipolar.
Great. Yeah. Thank you so much. It's a great message. So if anyone wanted to find out more about your work and what you do, where would the best place for that be?
Well, most of my research is for institutional investors. So it's behind a paywall. You can go to bcaresearch.com if you're interested in looking up some of that. But I do have a podcast that's focused not on finance and investing. It's actually focused just on geopolitics. It's called Geopolitical Cousins. I actually just, with my co-host, Jacob Shapiro, we just ranked the top 30 leaders in the world. And it's all for good fun. There's a lot of humor in it. We try to bring some levity to very serious issues. But yeah, I think it's both entertainment and educational. It's not focused on the markets, though. That's really my research that's dedicated mostly to the clients.
Great. I'll put it in the description below, but thanks again for your time.
Thank you.
Hey everyone, thank you for listening. I really appreciate the support. If you've got value out of this, I'd really appreciate it if you could like, subscribe, or comment, good or bad feedback. I'm always open to that, but it really helps with the channel. As I said before, only about 14% of people actually subscribe to this channel. So if you were to that, it would really help. It could mean we could continue to grow. If not, thanks for watching and see you on the next show. And you also might like this video right here. All right. Thanks again.